Good afternoon, morning to everybody, wherever you may be. This is Todd with our daily video. Hope you're having a fabulous day. Hope your week went well. We had a lot going on earlier in this week from a standpoint of news and whatnot. Today, being the end of the week, we really don't have a whole lot going on. But that's okay because the markets still have to be open and still move. And so, regardless of what you're trading, stocks, options, futures, forex, metals, anything in between, you're going to find that Fridays oftentimes will be days where the markets either become more volatile or they end up becoming a little bit flat in their movements. We'll go in and kind of take a look at all the markets and see what they're doing here, just to kind of give us an idea of how they work. Now, we're going to talk obviously about the simple trading method. We're going to keep it even more basic than maybe what the rules actually are, but I want you to understand the concept for what we're trying to do. If we look at the overall markets last night, from a financial standpoint, they were down. Gold was down $4. Oil's down, still above 90. Now, as you know, going into the weekend, we need to be cautious with the trades that we have. If we can get out of trades prior to the weekend, or if they're getting close to our targets or whatever, that might be a time to get out of it and move on, for the simple fact that over the weekend, we don't know what's going to happen. And that seems to be a little bit more the case these days with the financial crisis kind of globally. So be cautious of that. Now, specifically dealing with this simple trading method, there are two things that I want to illustrate here. One of them is that as we look for bullish trades or as we look for bearish trades, we're looking for some very specific things to happen that are going to cause us to be going long. So when we're bullish, we're going to be looking to go long. And that simply is that we're going to be buying the instrument that we're trading in anticipation that what we see happening on the chart is going to move higher. If we're bearish, we're looking to short the stock or the option or the currency pair, which is simply meaning that we're going to be selling the instrument that we're dealing with. And as we look at the chart, anticipating that chart moving lower. So there are two things that we are basically trying to identify. We're trying to first identify the trend as being up or the trend as being down. And we've talked about this in the past with our trends, looking at higher highs and higher lows, or lower lows and lower highs. To determine that, we could use moving averages, we could draw trend lines. There's a lot of things that we can do to help us with identifying whether it's trending up or trending down. The second thing is we want to see this movement back towards some support if it's in an uptrend, or a movement, I guess I can draw this a little bit better here, back up towards resistance in a downtrend. So you want to make sure that you can identify that. You want to be able to know how to determine the trend, know how to determine whether it's moving back to support or resistance, depending upon whether we're bullish or bearish on it. And that's kind of the basic concept of the setup here. Now the entry, I'll pull up another slide here, is simply going to be to look for the past bars as being closed or open. So if we're bullish, again, we're looking to buy. Let's say that the price has been coming down. We make some moves here. Now, at this point, and we're assuming that the overall trend has been going up, we get a pullback to support. And then as soon as this bar closes, we're going to look back at the past three. So 1, 2, 3. And we're going to say, okay, this is the point where if it moves above that, if on our next move we get it moving up above that, that's where we're going to set our entry stop to buy if it goes above the highest high of the last three. Now, of course, the reverse would be true if we were looking at a downtrend, except it's going to be the highest, the lowest low of the last three instead of the highest high of the last three. So this weekend, what I would suggest to do is, one, look at the markets to see how they're moving. Obviously, should be somewhat obvious that if the trend of the overall market is bullish, we want to be looking for opportunities to buy. And then look to identify on the charts the opportunity to enter into based off of the setup conditions that we've just talked about, using this entry point for the simple trading method, either move above the highest high or the lowest low of the last three. And if you can do that, you'll be right on target for being able to trade this method simply and effectively with your trades. So we're going to wrap it up here with that. Let's take some time to practice. Have a great weekend, and we'll be back on Monday to take a look at what happened over the weekend and what to look forward to this upcoming week. So until then, have a great day, and we'll talk to you soon.